Hey everyone, happy Thursday, January 15th. It's a little bit before 8 a.m. on the West Coast, and it's time for another market update. Going into the week, the biggest news we were expecting was the BLS jobs report, some inflation data. However, there was a bit of a positive surprise last Thursday afternoon when President Trump announced that he's asking the GSEs, who's Fannie Mae and Freddie Mac, who handle all these loans we deal with, to buy about up to $200 billion in mortgage bonds. Without getting into the technicals of why that's good, it's a good thing. That should help mortgage rates come down. That should help the bond market, which again is connected to mortgage rates. So things like this, besides the data, besides jobs reports and inflation, these are the things really can drive the markets. Another one on the horizon, which we've talked about, is Chairman Powell of the Fed. His term ends in May, and President Trump at that point will appoint a new Fed chair, and it all signs point to him pointing to someone or appointing someone that will cut rates like he wants. So again, we can make an argument: is that a good or a bad thing in the long term? But in the short term, that will be positive for mortgage rates. So that was a good thing. That pressured or that had mortgage rates come down when the president made this announcement. So all good. The data that we were looking forward to that got overshadowed by the announcement was Friday morning, and that was the December BLS jobs report, and really it came in as a mixed bag. So let's take a look. So on the left here, this is the business establishment survey. This is where we've talked about where they do a lot of seasonal adjustments. There is a lot of math involved, not just counting how many jobs are available. And that came in at 50,000 new jobs created. The markets were expecting about 73,000. So that was a miss. That would be positive for us for mortgage rates. And again, they made some negative revisions to October, November, totaling 76,000 less jobs than they originally reported. Once again, we've talked about this. They come up with higher numbers, then they revise them lower. Markets don't react like they did when they first saw that higher number. So this trend has continued. These numbers are not accurate the first time. So this 50,000 number might very well be revised down at over the next 2 months. However, the part of this report that the markets did not like is that the unemployment rate dropped from 4.5 to 4.4. That's a second part of this report where they actually call people. And a lot of that's going to have to do with people re-entering the workforce, leaving the workforce, falling off the numbers. However, again, these are the number that got announced at 4.4. So unemployment going down is something the Fed can look at and say, hey, we do not have to cut rates because unemployment is fine. So that was a bit of a mixed bag. And again, but still kind of was overshadowed by President Trump's announcement. Next thing, so we got December CPI report. And this came in as expected, so that's a positive. No negative surprise. This isn't the Fed's favorite form of inflation, which is PCE. But again, we get this before PCE, so it kind of gives us an idea what PCE will look like. The headline, which counts all numbers, was at 2.7% and went up 0.3% month over month. And the core, which takes out food and energy prices and just concentrates on the rest, that came in at 2.6%, and the core was up 0.2% month over month. So overall, a good report in the fact that it did not surprise us. The markets accepted it, and again, not a negative surprise. That was good. Next thing, so this is some positive news. So home sales seem to be surging. So first, let's look at existing home sales for the month of December. So these are homes that are already built, not new homes, that closed in the month of December. And that jumped 5.1%. And then now they're at a level, the highest level in about 3 years. So markets are starting to react to mortgage rates coming down. There was a lot of pent up demand, a lot of people waiting to sell because, hey, I want to see lower rates so I can buy again. So all positive there. The month supply was 4.2 months supply in November, dropped to 3.3. So not only did sales surge, but people, which happens a lot this time of year in the winter, people took their homes off the market. So less supply out there, but more demand tends to make prices go up. So this is something to keep in mind if you're looking. If you wait for rates to get too low, then home sales are going to surge even more, and prices will go up even more. Sure, you might save money on your rate, but you're going to be paying more for the house, and that's not what we want. All good for current homeowners though. Home prices go up, you have more equity there when you go to refi. And then the next part was let's take a quick look was new home sales. So new home sales was down a little bit month over month, but still they're up 18.7% year over year. That's a big number. That's a big jump back from what we had done over the last year and the year before that. So again, this all points to the house market kind of unthawing a little bit with rates coming down. So all positive news for people in my industry, for people in the real estate industry, and for people out there looking to buy. Rates coming down is good for everybody. Next thing, let's see here, is the average 30-year conventional. So according to that lender survey, we come in right now at about 6.07. Last week it's 6.21. Again, that announcement about the mortgage bond buying really is what drove this lower. I hesitate to tell you this, guys, but a couple days ago it was down to 6.01. We were so close to having a 5 in front of it. And we had got a little bit of a negative bounce back to 6.07, but still, down a 0.15 or so from the last week. But it would have been really nice to get that 5 in front of it. I was really, really, really watching that. And again, we popped up a little bit instead of going down just a little bit to get to that 5.99 or so. Important dates. So we're still waiting to hear about the PCE. The Fed's next meeting is on January 28th. So we got about 2 weeks away, a little bit less than 2 weeks away. Lots can happen in that 2 weeks. Right now, it's about a coin flip with it weighted towards probably them not cutting rates. But again, we got to hope that data keeps coming in our favor. President Trump keeps doing things that are going to be helpful for mortgage bonds, and hopefully the Fed keeps cutting rates. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody. Thanks a lot.